Still with us is Paul Donovan of UBS Wealth Management. Your thoughts?
So I think it was largely as expected. The forward guidance on interest rates is in line with what the market was thinking. Oh, yeah, we were expecting a summer rate hike in 2019 anyway. To give the forward guidance itself perhaps is a little bit unusual. Economically, I'm not sure that matters a great deal. One of the things is, central banks say we must manage expectations, but most people don't know what central banks do, far less what their interest rates are. So you tend not to get quite so strong an economic reaction. The bond taper, I think, was largely to be expected. We were looking for them to carry on until the end of the year, and we weren't expecting 30 billion. They've got to scale it back. So I think it's essentially what they should have done some time ago, but it's essentially what the markets was expecting them to do. But it's just sort of locking them in a bit, that today we're getting the announcement that the bond buying's done by December. Today we're getting the announcement implying that rates may go up in September. They haven't actually said that, of course, in next summer, implying that we'll get a summer rate hike without actually coming out and saying that.
Paul, in a broader sense, is this Mario Draghi essentially declaring victory and basically saying, my work here is done? I said we'd do whatever it takes, we did it, and now we're going to get back out of it and we're going to go back to normal life.
Well, yes, I mean, there is the conspiracy theory that he wants to, when he retires next year, leave by saying, I was the man who saved the euro, etc., etc. I got us through this process. There's an element of that, but I mean, frankly, the economy is the thing which declares victory. The ECB doesn't declare victory. The economy is doing it.
I suspect Mr. Draghi might say, and others might say, that the economy is there in part because of what the ECB did.
I think it's certainly true to say that, yes, the economy responded because the ECB responded. It's also fair to say that the extent of the recession was partly due to the ECB not responding quickly enough and dealing with political problems. Admittedly, the ECB has more political problems than the Fed does, but that then created, perhaps a more severe downturn as well.
This does give us a second major central bank, though, that is stopping QE. And that's got to take liquidity out of the global market. What is the likely effect of that?
Third major central bank, the Bank of England, has already stopped.
I beg your pardon. I beg your pardon. I'm so sorry.
Process.
To James Bond, I don't know.
Can we count them? Anyway.
Yeah, no, they're a major central bank.
Well, now this is, I think, one of the critical issues. They're not necessarily taking money out of the market, because what are central banks doing? Central banks are reacting to falling demand for cash. That's what's going on. We had last month Apple saying we've got $100 billion of cash on our balance sheet. We don't want it. Well, that's a reduction in demand for cash. If you have got falling demand for cash and you leave the money supply unchanged, you've got a problem. What they're doing is simply reducing supply as demand falls. That doesn't necessarily take money away from the markets overall, because on a net basis, they're simply reacting to a decline in demand.